joining in with us on the call. I'd like to just start with asking everyone if there's anything great they've accomplished. We've been hearing lots of feedback from people, so is there any first steps or great things that people feel like they've accomplished in the last week or even just since they've started the program?
I'll start with a quick one. I'm pumped. We have a client who has a lot of credit card debt, and they have made a huge first step and have paid off a couple $1,000s in the last few months. So I'm super excited for them to able to make that progress. It's awesome. Anne and Chris, do you guys have anything that you guys want to share?
Um, I guess recently we've been talking to mortgage brokers and are starting that process, so that's really exciting, and it's even more exciting because we feel like we have a better handle on our financial position.
Awesome. How is the mortgage process going for you guys so far? Has it been overwhelming? Are you?
Yeah, probably a little overwhelming, but it's nice that the people that we're working with are providing a lot of information and trying to help us along. So
Good.
good.
We are working to do some more training on buying a house. And a lot of the acronyms confuse people, and maybe Chris is well versed in it also. But we're trying to do a lot of that. So watch for that coming out, but to kind of help you guys through that process of buying a house and understanding, how many rates you should go out and get quoted and all the different things to look at when looking at a mortgage. That's really exciting, Anne and Chris. So congratulations on that. All right. Matt, I'm going to unmute you. Are you there? Maybe not. All right, Beth, I'm going to hand it back over to you then. And when Matt comes back, we can have him speak about some of their good accomplishments.
Sounds good. Well, I'm pretty excited because I got almost everything together for our taxes. So I think I'll be able to send that off on Monday. So that's been my big financial accomplishment over the last week or so. I wanted to see, so the idea in this module was all about life insurance, disability insurance, and estate planning, meaning wills and trusts and all of that. And again, I'll do a high-level overview of what I think were some of the key points in there. But before I get started, are there any burning questions that anyone has?
I don't have any right now.
Oh, sorry, I didn't mean to cut you off. None from you? Emily, are you seeing anyone raising their hand coming in?
Yeah, I'm going to see if Sarah and Matt have anything. Do you guys have anything?
So we've actually just started looking at doing a refi the last couple of days as well. Trying to figure out if it makes sense to go down to a 15-year mortgage from the 30 that we're in. But just getting some numbers back and stuff on that, so it's not sure quite yet if it makes sense for us, but just kind of looking into it.
And Matt, why were you all thinking that you may want to switch to a 15-year?
Well, we've got the HELOC as well, and it's at 4.5% right now. And I was hearing that 15-year rates were getting as low or are as low as 2.5%. So if we could roll in our mortgage, which is at 3.5%, and the HELOC into one and not increase the payment by a whole lot to go to a 15-year, then it might make sense. Or if it was something that was manageable for us, but I don't know if it would end up tying up too much money all at once for us. Or
Yeah, and that's something that we should talk about for sure when we have the one-on-one. But and I know it's not the topic we were planning on talking about tonight, but we want to talk about what's ever of interest to you all. I can't remember, Emily, have I talked much about the idea of paying down a mortgage early on any of these sessions? I can't remember if I have.
Not in detail, no.
So the same principle applies essentially to this. There's two situations that essentially have the same principle. And that is that some people pay additional payments towards their mortgage every month. So they may pay an extra $100 or $500, whatever they decide, every month to pay the mortgage down sooner. And the same principle that I'm going to talk about right now applies also to doing a shorter than a 30-year mortgage as well. And what I usually recommend for people, however, I will say, Matt, in your situation, if you are able to bring all of that together and still just barely have, in your payments not much more than it is now, it may make sense. But usually I recommend that if people want to have their mortgage paid off sooner than 30 years, then what they should do, as opposed to doing a shorter term mortgage or as opposed to putting an extra couple $100 a month towards the mortgage, is to actually take that difference in what you would have paid between the 15-year and the 30-year mortgage and or the additional amount that you were paying every month. And that you take that amount and then you just put that aside into a savings account. Depending on your situation, you may moderately invest it. And then what you can do is you can take that money and pay down the mortgage all at once. At the same time, so let's say that you get 15 years out, you should have about enough money to just fully pay off the mortgage at that point anyways, if you were disciplined about saving that money. And it just gives you more flexibility during that time of not having the money tied up. So again, I usually recommend that people just take the difference in the payment and set that money aside, and then with the intention that you could use that to pay down the mortgage early as one big lump sum, or you may need it for have other needs that come up. But again, I'd be happy to talk about more specifically how that ties to your situation on our one-on-one call.
Okay, perfect. Thank you.
You are welcome. Does anyone else have any burning questions on anything, this financially related, of course, but anything financially related?
I think that since we covered Sarah and Matt and Ann and Chris, I assume there's no other questions, so let's move on. But hopefully, I'm hoping people have some really good questions as we talk about the next steps, which is actually putting a plan in place to make all this stuff real, right? We've given you guys a lot of information. Let's make stuff actually happen.
And that's for our call next week, right? That's what you're talking about, Emily.
And I think we do a little bit of an intro today to help think about what those next steps are.
Okay, perfect. So why don't I do a high-level overview on the insurance part? So I recommend for people who, once you have children especially, you definitely need to be considering life insurance. There's a lot of ways to calculate the amount of life insurance that you need. A quick and dirty way that's fairly accurate is to take whatever your take-home pay is and multiply that by 20. So if your take-home pay is $50,000 a year, that means that you need $1 million death benefit for life insurance. So the death benefit is the amount that's paid to someone upon your death. Now, you may think that is crazy amount, times 20 of your income. Where does that come up with? Well, the place where I come up with that number is that if you were to pass away, and again, this can be looked at more individualized. This is just a quick and dirty way to figure it out. But if you were to pass away, essentially you need to replace your income to your surviving spouse and family. And so what this does, it essentially replaces your income for 20 years going forward. There's a few different factors that move in there. Obviously, the beneficiary would probably invest those proceeds and get a little bit of a rate of return on it, but then there will be some taxes due on the interest and dividends of that investment, and there's also inflation happening at the same time. So again, that's sort of a rough way, but it's how I almost always start with people when I'm calculating the amount of insurance, and then depending on the situation, I'll fine-tune in. The other thing is, for most of our clients, term insurance is what makes sense. So there's term insurance and there's permanent insurance. Permanent insurance is more expensive. Permanent insurance is there for your entire life as long as it's funded appropriately. Permanent insurance also accumulates something called a cash value. So it's an investment component in the policy that you can access and take money out during your life, which is very attractive in certain situations, but I don't recommend that people usually look at doing cash value insurance until they're already maxing out their 401k, save, they have the emergency fund, every area is checked off, then I usually recommend to look at permanent insurance. And again, with term insurance, I'm usually recommending for most of our clients 30-year term insurance. Does anyone have any questions about life insurance? How much, what types, where you should get it? Any questions about life insurance?
Beth, when I think about insuring, your income for 20 years, that sounds really expensive to me. So can you talk about how much to expect to pay for the term insurance or the permanent?
I knew you were going to ask that. So I think I will tell you that so here's the premiums can vary greatly based off of a variety of factors, based off of your age, based off your health, if you're a female or a male, and also depending on your health situation. And so right now, I believe that I pay $146. I have two different policies, and I know one of my policies is $1 million term policy, and I'm pretty sure I pay $146 a month. And I'm 35 and pretty healthy. So that may give you sort of a range. My husband, who's about 7 or 8 years older than I am, for that same amount of insurance, I think that for Chris it was double that. It's like $300 a month. I know that we pay $446 a month for those two policies combined. So that may give you a sense of that. Now, one thing I do recommend is that there's certain insurance people, and they only write insurance for one company. So, for example, like State Farm, places like Northwestern Mutual, they only write insurance for that one company for the most part. And there's nothing wrong with those insurance companies. But I typically recommend for people to go out and find an insurance agent who can quote out a lot of different insurance from a lot of different companies. Because with term insurance, it really does come down to just what's the cheapest. So as long as it's a company with decent financial strength. So I don't know if I did a very good job answering your question, Emily, because that amount can vary so drastically.
Sure. I guess my point is that I think that everyone here wants more money rather than less, and that sounds like a lot of money. Like $200 a month could go towards a new house, right? So it goes back to the priorities. So I guess the question is, at what point are you okay having your life insurance through your employer, and at what point do you need to have your own life insurance? And is it okay to do only 10 times if it brings the premium down enough? I mean, how do you kind of weigh the costs versus the benefits?
Well, so a few things. On having it with your employer, you always take advantage of the free insurance if available at work. If you are healthy, it is often less expensive to get insurance outside of work than it is to get insurance at work. And that's because insurance that's sold through work is based off of average health. And so if you have above average health, then it's usually less expensive for you to get your insurance out away from work. So that's one thing. And then the balance on it. It's really, it's up to every couple to decide. I can just tell you though, I've seen situations where people have been underinsured and where one of the spouses died and the other one was just in bad shape. So I've seen that happen. There's other things to consider. So if you're in a household where you're not spending all of your income, where you're maybe saving more than you need to be, or that could significantly reduce the amount of insurance that you need. It may be a situation where you already have significant assets saved up, then you don't need as much insurance. So like everything, moderation is fine. I just think you need to understand the risk of doing something this in moderation, but anything is better than nothing. So
That's helpful. If anyone else has any questions, feel free to raise your hand. All right, Beth, I say we move
Well,
on.
I will quickly skim over disability insurance then. So most employers offer 60% of disability insurance. That means if you were to become disabled, the policy or the insurance policy through work will pay you 60% of your income. Now, one thing to consider is that will be fully income taxed. Often through employers, you can purchase up to 70% of your income. And I do typically recommend that people do that, especially because it's not usually that expensive. Like it's, I don't know, 30, 40 bucks a month or something. It's not that expensive. And it is, again, it's actually, it's more likely, not to sound depressing now, but it's more likely that people our age become disabled than die before age 65. And I think most people, when they think about disabled, they think about getting hit by a car. But I've seen plenty of situations where it's developing a chronic illness. So I had a client who developed lupus and was no longer able to work. Um, it could be, depression or some type of mental situation as well. So it's not just the obvious falling off the ladder or being hit by a car. It's all those other chronic debilitating diseases that could cause that. So, any questions on disability insurance? Emily, do you want me to go on and talk about estate planning then?
Yeah, I think just one thing too, a little side note for us. For those of you who know our brother Daniel, he had like a random heart or virus attack his heart and he was in heart failure. So he went from this healthy guy to now unhealthy and uninsurable is the reality of it. So I will tell you that his biggest regret was not having more life insurance when he was healthy because he may not ever be able to be insured ever again. So if he were to get married and have kids, that's going to definitely put him at a severe disadvantage. So that's kind of my one plug for life insurance is if you are healthy, it's a great time to do it because it's going to be a lot cheaper.
Mhm. I agree. Okay, so let's talk about estate planning. I'm going to focus on wills.
Beth,
Oh,
Anne,
did someone have a question? Yeah.
all right, Anne and Chris, you guys are.
Yeah. Yeah, I guess I'm just wondering, so like when you purchase life insurance, does that rate stay the same then for the entire term?
Yes, assuming that it's what's called a level term. There are very few what are called increasing term policies out there, but 90% of them are called level term, and that term stays the same for the entire term of the policy. So if you buy a 30-year term policy, it stays the same. After that 30 years, the premium goes up a large amount at that point. So you can keep the policy past that term, but very few people do because it becomes ridiculously expensive at past the term. Does that answer your question?
Yes, thank you.
Right. Perfect.
All right, and we have another one. So I'm going to go to Matt and
Yeah.
Sarah. Are you guys there?
Yep. So along the same lines, if we're mid 30s, how long of term would you recommend get a 30-year term or?
Yes, usually. So 30-year is the quick and dirty answer. Technically it should be to whatever point you have enough assets to be able to retire. So meaning that if you'll have enough assets to retire, if you're in your mid 30s and you'll have enough assets to retire by the time you're 65, then that's the perfect, because if you have enough assets to retire, then you also have enough assets to support your family if you die. So yes, that's the quick answer. Now, a technique that I use quite often to reduce the cost of the insurance is I will do a partial, half the insurance is 30-year term and half the insurance is 20-year term. And that will reduce the cost of the insurance overall. So part of it you'll only keep for 20 years, and then part of it will go on for another 10 years after that. Anything else on insurance?
Oh, sorry.
No, go ahead.
Are there people that offer like packages like that where it's half 30, half 20, and it's one deal? Or
Yeah,
not really?
Yeah, I'm not aware of it being with one company. I will, or like a package deal like that. I will tell you that, for example, Chris and I have most of our insurance with one insurance company, and so I have it set up on. They're all on the same automatic monthly payment, which makes it nice. So from my standpoint, on a monthly basis, it doesn't seem like I'm paying premiums to all these different places, but I have not seen any places actually package it together.
Okay.
Any other questions? So now estate planning. So tonight's a depressing topic. We're talking about death, disability, and now we're back to death again. Um, so the number one document that I'm going to talk, well, I'm going to focus on wills. Wills are really the most important. So it is very important that once you have kids, if you have kids, that you put a will in place. And the reason for that is because the will states two very important things. It states who will take care of your kids if both you and your spouse were to die, and it will also state on how your money is to be controlled if when you and your spouse pass away. One of the a feature that I really like in wills is often you can have a will create what's called a testamentary trust. So it creates a trust upon your death. And the reason that I like that is because you can be much more specific on how the money is used or how it should be used or spent after you're gone. I am not in favor of trying to control money and control things from the grave. However, it's really nice in the situation. I often have clients where there's one couple that they think would be great or one person that would be great to take over guardianship of the kids, to take care of the kids. They're like, yeah, they're not really the best money people, though. The trust would then allow someone else who you may think is more financially responsible to manage the money. It can be very liberal, saying that the kids and the caretakers of the kids can have money for about anything, but the trust allows a little bit more control over the money. One thing that Emily and I have really struggled with our clients is telling them where to go to get a will put in place. We have played a little bit on LegalZoom, and I do think that LegalZoom works just fine. I just get a little bit concerned that people who haven't ever read a will or that maybe feel a little bit overwhelmed, feeling confident they're making the right decisions. So the other option is to go to an attorney. I do recommend if you go to an attorney, you want to go to an attorney that focuses on estate planning. So don't go to the DUI attorney, don't go to the bankruptcy attorney. Go to an attorney that does a fair amount of work in estate planning. It doesn't need to be a high-level attorney. You're probably talking about $1,000 to get a will put in place. You may be able to get it done less expensive. I know LegalZoom for sure is less expensive, so if you don't feel overwhelmed about going on to LegalZoom and doing it yourself, I think that's fine. Anyone have any questions about wills?
You can raise your hand if you do, and we'll open up your line. And to Beth's earlier point, don't go to a DUI attorney. Beth, didn't you have a client who did go to a DUI attorney for the will, and it was a mess?
Yeah, it was a mess. I've had that. Yeah, there's been some interesting ones. I'll quickly just touch on powers of attorney. Those are documents that state there's one set that are financial powers of attorney that states who will make financial decisions for you if you become incapacitated. There's healthcare power of attorney that states who would make healthcare decisions for you when you become incapacitated. And when I say incapacitated, it's you're living, but you're unable to make decisions. So you're in a coma, you're in a state where you cannot make decisions. I really say that anyone over the age of 18 should have a power of attorney in place. If you're married, it's not that as big of a deal because usually the spouse will very much be honored. to be able to make those decisions, but powers of attorney are good. And if you want to have great dinner conversations with your parents, you should make sure your parents have these powers of attorney in place. The healthcare power of attorney is also really important because it has what I call the pull the plug language. So it states at what length life should be maintained and supported versus when the plug should be pulled. So I highly recommend those as well. The nice thing about powers of attorney is they are what are called statutory state forms. So you can go to Google and type in your state name and type in healthcare power of attorney or property power of attorney, and you should be able to get a free template of that and fill it out. Some states require notaries to notarize those as well. So any questions about estate planning, wills, powers of attorney, any of that?
All right, Anne and Chris have a question, so I'll open up their line.
Yeah, for power of attorney, you talk about how each state has their own form. So if you move to different states, do you need to redo them, or once you set it up, it's good to go?
Yeah, and technically you should get it changed for the state where you're residing. However, I think pretty often they will recognize those from state to state. Any other questions on that? Emily, do you have your powers of attorney in place yet?
No.
I've been talking to you about this for like 10 years.
I know, well, I keep moving is the problem, so
Right. Yeah.
later. Well, let's go to the fun part. I mean, let's talk about next steps. Again, we've gone through all the information. Let's talk about next week and really starting to create a plan and hear what people want to kind of have be their first step to start making real progress. So Beth, do you want to do a quick introduction to what we're having people focus on next week to put it all together?
Yep. So next week we're going to talk about our financial achievement experience. And this is the fancy name that Emily and I came up with, which essentially is a financial roadmap. And I think you're really going to like it because I think it's a great graphic piece. And on this piece, you're going to start to get into the nitty-gritty of, okay, what do we want to accomplish in the next 30 days? What do we want to accomplish in 60, 90 days? I think we put 6 months, a year, and 3 years from now. And so it's a really great place to pull all this together. We've talked about everything from budget and cash flow and savings for retirement and insurance and estate planning documents. We've covered a ton. So the financial achievement experience is we're really going to pull everything together and for you to be creating your financial plan. Again, this is a great thing for when we have our one-on-one session, that we can work on that and create that individually for you. So, and when are we sending that out, Emily? Are we sending that out tomorrow?
It'll be either tomorrow or Friday. But yeah,
It's Friday. Yeah, I'm flying to Colorado tomorrow to see Emily, so we'll shoot a video at some point and send that out. So we'll be sending that out, and if you want to start working on jotting down some ideas, and then I think especially next week, coming with questions, a lot of it goes to that prioritization that we talked about before. Do we save more for the 401k right now or more towards the house? Or do we pay down this debt? Or should we be putting money into the kids' college plans? So we'll send that out, and maybe over the weekend start to think about some of the things that financial goals that you want to accomplish, and then we'll go over those, or not go over them in detail, but answer any questions you have on prioritization and what steps and what to take first.
And Beth,
did you want to add? Yep.
Can you just share a few of the goals that we've seen from other clients, just to give people an idea of how they should be thinking about these and how to make the most progress?
Yeah, so I would say a large number of our clients, one of the first things they have in the first 30 days is to start utilizing Mint or some other application. That's a very common goal because as we talked about in an earlier session, it really all starts there. So if you feel like you need to be saving more towards retirement or saving towards a house or paying down debt, you have to be able to find money to allocate towards that. And so very often we see that there's budgeting types of goals that people have in there and fairly early on in the process. I mean, it's everything from setting up a Roth IRA, increasing the 401k savings, paying down credit cards. So sometimes where people who have significant debt, we'll see that we break the debt into steps. So it may be the goal in 6 months from now to have this one particular credit card paid off, and then to have everything paid off in 2 years. So it just depends on the situation. But again, Emily, are there any others that stick out to you as being like on every single person's financial achievement experience that we've done?
A lot of it's about finding that money. So finding money and having specific goals. We've had clients who've actually made a game out of it, and I think we had a client who found $2,000 in 1 month. So it's actually amazing what you can do when you have a goal out there and you're trying to achieve it. Some of them too are getting wills in place, just setting a deadline because otherwise they won't do it. We had a client who just had a baby, and so that was one of their goals, was to have a will before their baby came. But I think most of it is, being able to have measurable goals that they can see that they're making progress. They can see that they're actually getting closer to having that money for that down payment or having money to pay down that debt. It's about seeing the progress and knowing that they are making steps.
Mm-hmm. Hey, and Emily, you triggered something when you had mentioned the people with the new baby putting a will in place. Sometimes through work, your work will pay or have a feature where you can pay a discounted rate to get a will or a trust or powers of attorney put in place. So I forgot to mention that. Be sure to look there for sure if there's a service that you have at work for that. But again, I think that what people love the most about this financial achievement experience is they can just then pull it out ever so often and then just make sure that they're on track. Our bonus session that we're going to do at the end, I think we're going to do it on 2 different topics, but one of the topics that we've been finding is of really great interest to our whole crowd is the idea of automation. So all of us are really, really busy, so how do you put things in place in your financial plan so it's on autopilot to help you reach your goals and then you just don't even have to think about it? The reason I say that is because that can be part of your financial achievement experience as well in that plan that you put together.
Awesome.
Any other questions before we close up tonight?
Yeah, I'll open up the lines and ask for questions. So Anne and Chris, you guys are first. Do you have any questions before we close out?
No questions.
Awesome. Matt and Sarah, do you guys have anything before we go?
Nope, none from us.
Cool. All right, and then I have Wendy. Wendy, do you have any questions for us on this call tonight that we can help you with?
I bet Wendy in the background is wishing if they didn't.
Sorry.
Oh, no, that's okay.
We had it on mute to keep the kids out. No, we're good. Thank you.
Awesome.
I was going to say, I bet if the 2 of you didn't have it, I bet you were maybe wishing that you had accident insurance this week.
Yeah, I know.
They had some broken bones. Did you say that? Yes. So anyways,
Yep.
That would have probably been nice, but I don't necessarily recommend people do that, but Oh,
We're just meeting our deductible early this year, that's all.
Yeah, that's a good way to look at it. Well, and I think, Emily, we sent out the link for people to start signing up for the one-on-one calls as well. Is that correct?
That's correct. So everyone, if you didn't receive that link, email us. But everyone should have that link as well as the 2 documents that Beth needs to make sure she gives you guys the best advice possible. So there's a budget worksheet in there. She wants to highlight. Beth, do you want to talk about those 2 worksheets actually yourself?
Yeah. And as I said last week, you can show up to that meeting without doing any homework, and you'll get something out of the meeting. But if you want to get as much out of that meeting as possible, I need to have just sort of a general sense of your overall finances. So it may be just as simple in your budget worksheet of just sort of putting what your total take-home income is and then throw in a few of the expense items, and then you may just put in one big everything else expense. So anyways, the more you can put in that budget worksheet, and for sure there's the balance sheet worksheet, if you can put that into place, that will help you get so much more out of the call because we won't have to spend, the first 15, 20 minutes of the call of me saying, oh, do you have a Roth IRA yet or not? So I can just quickly glance through everything, sort of see what your financial picture is. And then I'll tell you the way that I'm going to start the meetings. I will ask you in the very beginning, what are the 1 to 3 big things that you want to get out of this call? And so I'll ask you that right away. What are your goals for the call? What do you want to get out of this? So it may be things such as, we are trying to pay down credit card debt and save for a house at the same time. How should we balance that? That's the big question. Or, we've been going along with this plan and we think that this is what makes sense. Do you think that this makes sense? Or it may be, we're thinking about refinancing our mortgage and we just want to get your perspective on it. So it can be, anything that we've talked about. And so I'll just then focus on answering whatever your biggest goals and concerns are for that call. And in all of them, I'll also, we'll spend the last at least 5 minutes going through the financial achievement experience one-on-one to create a game plan for all of you to implement going forward.
Awesome.
Any other questions before we close up tonight?
I think that's it. I'm also going to be sending out a survey. So if you guys it's going to be super short, but if you'll give me some feedback, one of the biggest things that I want to see is if you guys are able to find extra money in your life. I know that that's something that we really emphasize. We want to make sure that you guys are finding extra money in your lives to be able to reach your goals more quickly. So look out for that too, in addition to next week's module that's really short and easy, and it's all about setting goals.
Cool. Did we send this group the Find the Money guide?
They did get it in the first group, but there was a lot of stuff in that module. So I mean, don't you agree that that's like gold, right? Like being aware of where money's hiding in your life is a huge key to getting to your goals and getting to your goals more quickly.
Yeah, I agree. Well, have a great evening, and we will talk to you next week. Take care.